Welcome to the Trust Us, We're Professionals podcast with your friends from SSC, CPAs, and advisors. This is the podcast where we break down financial matters found in pop culture and, the overall zeitgeist. Basically, we make complex financial matters more consumable for our listeners. And who doesn't like consumables? We're all licensed professionals here, which clearly makes us qualified to have a podcast and talk about financial matters. I'm your host, Chris Underwood, a financial advisor with SSC Wealth, and I am joined by Michelle Hammond and Chris Cohart, two experts whose credentials look like something like alphabet soup behind their name. So this is our debut episode. Yeah! So I'm going to ask Michelle and Chris to both introduce themselves briefly, if that's possible. Michelle?
Are you commenting on my extensive background, or that I talk a lot, or
just a little bit of both?
Just a little bit of both on that? Yeah.
I think.
Hey, I'm Michelle Hammond. I'm a CPA at SS&C, CPAs and Advisors. I serve as our Chief Strategy Officer and work primarily in our consulting group.
I'm Chris Cohart. I'm a Senior Manager with SSC. I'm also a CPA.
Yes.
And I've
Are
been
you sure about that?
And I've been working for Summer Spencer and Company for 3 years, and in the accounting world for 20 years, and I'm going to say 8 months, just so I'm slightly younger than Michelle.
42 tax seasons almost between the two of you.
Absolutely.
You guys have seen some
A lot.
A lot.
A lot. Well, that's good, because in today's episode, we are going to talk about the infamous write-off in the media, taxes in the media in general, and strange tax deductions we've seen both firsthand and read about. But first, let's talk about the infamous write-off. It's been mentioned a bunch in some iconic shows, and here's a prime example of what I'm talking about.
Jerry, all these big companies, they write off everything.
You don't even know what a write-off is.
Do you?
No, I don't.
But they do. And they're the ones writing it off.
All right, of course, that's Seinfeld, the awesome Seinfeld. You guys Seinfeld fans?
Absolutely.
I don't think there's a day that goes by that I don't quote something or attest something to Seinfeld.
If I'm flipping through the channels and it comes on, I have to watch at least an episode, at least. Yeah. So they're talking about, the write-off. You don't even know what a write-off is. That's my Seinfeld. It's not very good. Let me try. I can do that better. You don't even know what a write-off. Terrible. I'm stopping. Okay. So Michelle, Chris, since you guys are the experts, I'm not the accountant. Can you talk about what they're talking about and what's BS about this?
Well, I enjoy that clip because it is just such a broad, it's a write-off. Well, what's a write-off? I don't know. Well, who writes it off? I don't know. I mean, it's just this back and forth of complex thought of what that actually might look like. And is it BS? No, I think majority of people probably have the same conversation. Well, that's a write-off. And then they have to come to us and we say, yeah, it is. Maybe it's not.
Maybe it's not. My problem with the clip, and I love the clip, but he's talking about how the post office gets to write it off. And, number one, they're not a taxed entity. Number two, they've had these enormous unfunded losses for years and years and years. The last thing the post office needs is a write-off.
Well, they are writing it off.
They are, but they are still doing it. I mean, it doesn't, they don't need it. It's just,
I mean, it could have the argument of whether it's a trade or business or really this just a hobby for the federal government to deliver our mail.
They have not made money in 3 out of the last 5 years. Sounds like a hobby to me.
Yeah, I agree.
Let's talk about a more contemporary reference. The Golden Globe winning Schitt's. That's SCHITT.
No need to bleep.
I'm just, right. Yes, no need to bleep. Schitt's Creek. I love this scene so much. Dan Levy, Eugene Levy. Let's hear it.
That's not a write-off. That's not a write-off. This, not a write-off.
Oh, well, the betting's non-refundable, so.
David, a write-off is a business expense used to reduce your taxable income.
Okay, well then, why isn't it called a tax write-off?
It is! It is! You can't just buy things for yourself and write them off.
All right, so this is just awesome.
This is the most accurate piece of tax information
Go to town.
on the television today.
Yes, agreed.
Tell us why.
It's humorous.
Well, I said accurate.
Oh,
let's
that's-
go
well,
with the most accurate.
I laugh a lot of times when people come and ask me about tax deduction, so it's accurate for me.
Oh, we've lived this.
Yes.
We are the dad in this situation.
I think this is a classic argument of ordinary and necessary.
Yeah.
It always goes to the ordinary and necessary. And
Yeah.
we can almost always argue it is ordinary and it is necessary for my business. For him to feel good, he needed that lamp.
I think it gets down to the core of a write-off or a business deduction. He still went out and spent all this money on all those things. Yeah, sure, cool. It's a deduction, right? Ordinary and necessary in the course of running a hotel, or ordinary and necessary in the course of having your home office. But at the end of the day, a deduction is worth 30 cents on the dollar, 40 cents on the dollar. You still spent $1.
Right.
So help me with that, Chris. Is that you're still 60 or 70 cents out of pocket negative?
Right. And I don't usually like that math.
That's not good math.
That's not good math.
So a deduction does not equal free money. Maybe that's my t-shirt.
I think that's a really good point. I think a lot of people in the general public think that it's an apples to apples thing. You know, spend $1, get $1 back, but it's not.
No. Spend $1, save 30 cents.
Mm-hmm.
I mean, it's a conversation we have in our house a lot. My husband owns a small business, and he's a contractor, and he can justify about near any expense, any tool whatsoever, by just saying, well, it's a write-off. Don't worry, honey. It's a write-off.
Yeah, my question is always, how's that going to make you more money?
Right.
How's that going to make your business more efficient? Before we go spending money in any given year, let's just make sure it makes sense.
Yeah. The best thing you can do is look for deductions that keep you cash flow neutral. So things that you are already spending money on, ways to allocate that to your business. Like, have you always been paying for your cell phone personally, but using it extensively for business? Well, allocate some of that to the business. Take that deduction. So that's a positive cash flow change because you were able to deduct something that you were already spending money on.
Maybe they still have a 1980s IBM computer.
Those are worth something now, I think.
Right. That's a dual. They could sell it for something positive, and then they can get a computer that actually works. They can make it easier for them to do their internal accounting and budgeting and ordering and inventory management.
Yep.
Yeah, it's a good point. So let's talk about some more kind of, taxes in pop culture. Obviously it's tax season right now. Speaking of which, let's talk about a episode of Young Sheldon. It's a good show. You do like this a lot, right, Michelle?
I like this show.
Yeah.
Not
It's
like
well
the H&R
acted.
Block commercial.
Very well acted. Recent episode, I'm not sure if it was a rerun or not, but it was
Brand new on April
it was
15th.
brand new on
They
April
thought
15th.
that it would be a perfect time to drop an IRS audit episode.
Does something happen on April 15th that would correlate to that?
Typically Underwood, there would be a tax deadline.
There's a tax deadline?
There is, but not last
For
year.
how long?
And not this year. And I don't know. Usually we are done, but we were not done on April 15th this year.
Well, this episode of Young Sheldon, you can probably explain it better than
Yeah, I've
me.
not seen this, Michelle.
How did you? You knew I wanted to talk about it,
I like responding in the moment.
but how are you going to? All right, this is what I deal with. Okay.
We hear that a lot at the office.
Jeez Louise, I'm the only one prepared. That's fine. This episode of Young Sheldon, the parents get a notice in the mail that says they owe $4.37. Immediately, the dad is like, pay it, done. Don't want to be on the IRS's radar. Sheldon, who's 11, who did the tax return, says, don't pay. I'm not wrong. I'm right. I'll call them and get this taken care of. The dad says don't. He does it anyway. And a couple days later, they get a letter of intent to audit 3 years of their tax returns.
Over $4.
Over $4 because he argued that. And I thought it was cute. The Sheldon said, are you sure it doesn't say applaud
As opposed to audit?
as opposed to audit? I feel like that every time they get the tax returns from us. Like, clearly they're like, this is perfect.
I like when we were talking about it the other day, you said he was arguing to the IRS. What was the garage sale argument?
Yeah, it's kind of funny. It's almost accurate.
That's what I was about to say. Was it accurate or not?
It was like within a little bit accurate. He had said that that the proceeds from their garage sale weren't considered taxable income, which is accurate because it's a sale of a personal good. It's like just like you don't pay tax when you sell your personal vehicle, you don't pay income tax on it, right? Especially when you're selling stuff at the garage sale for a nickel when you paid $45 for it. You're not going to be paying tax on the gross proceeds. He said that was because they turned around and donated it to a charity, but really just principally, you don't pay taxes on your garage sale income.
Yeah,
and principally because we never sell that as a profit.
Right.
That everything we sell at a garage sale is $1, $2. Maybe you got your video game system for like $10. You got a whole package you sold for $10. But you definitely bought that for a lot more than $10. So principally, nobody's really selling their car or their personal property at higher than what they bought it for.
Right.
And so generally speaking, you're not going to pay any tax on the sale of your personal property unless you bought a Lamborghini and you sold
we can
that.
break that down later.
Yeah, maybe.
Yeah.
But
at a garage sale.
For his garage sale proceeds would not be, because he didn't make any profit on the sale of those. He didn't take the losses either, but he doesn't have to pay tax on the proceeds. To Sheldon's point, I would agree with him. If he was the IRS auditor was trying to tax him on the garage sale proceeds, I'm going to side with the 11-year-old here.
That's always a good bet.
I'm siding with the
over
11-year-old.
Yeah, I get it.
He can't prove that he's in the business of garage selling, if that's a word, and he would have to show that he made a profit on that on those.
We have clients that are in the business of garage selling.
Yeah.
They're running around buying things and reselling them.
They're the ones that are asking for a dime for your quarter.
They're knocking on my door at 6 a.m. when I said come at 8.
Right.
Asking for a sneak peek.
Because they turn that 10-cent thing and turn it over for 15 later. Volume.
Now, clearly there would never be an audit over $4 because the person would pay it like Sheldon's dad wanted to do. But have you guys ever in your professional experience seen an audit triggered over something silly or something pretty small?
I would say most audits, that's hard to say. A lot of audits start on something small. And once they open the door is open. And that's when they usually find the other stuff. So many audits today are purely just a statistic. They're looking at what your mortgage interest is as a percentage of your income compared to the national average for someone in your income range, or the taxes you've paid, the medical expenses that you might have, charitable contributions, all as a percentage of your total income to see whether you're outside the range or not. And if you are, there's a chance that you get audited, but it's still really, really small at this point in time. And I think small businesses, Schedule Cs, probably have the greatest chance of audit, because I think that's where the most risk is for in the IRS's eyes. With the 2017 tax cuts, they took away so much of the fluff of itemized deductions, those 2% miscellaneous itemized deductions, those unreimbursed business expenses, those financial expenses, those things were always high risk. And now it's just charity, it's just interest. I mean, hardly anybody does medical. So it's taken away a lot of the individual audits. But those Schedule Cs, those businesses are really kind of where your risk is. And again, those are mainly statistics as well of looking at your NAICS code and seeing what percentage of your revenue you're spending on employee benefits or repairs and maintenance or what have you.
Mm-hmm. I mean, the industries that I think we see getting audited the most are our contractors, restaurants. Again, ones like you said that just have large percentages outside of other people in their industry, which is really hard to gauge and to see what's going on with that. But I'd say that those are, like you said, a lot more for small businesses than it has been for individuals in the past, with the removal of employees being able to deduct their non-reimbursed business expenses. With that being gone, there's just not that many deductions anymore for a W-2 employee.
Yeah. Well said. Well, let's talk about some strange but true, some deductions that you would think would trigger an audit. But like I said, these are strange but true. So do you guys want to talk about a couple of these that you've read about or experienced?
And we won't say names to protect the innocent or the not so innocent of our clients who have taken some of these deductions as well. Not all of them on the list. Some of these are just,
Are we going to go through some that attempted to deduct them?
And then you told them no? Yeah, that
we
has
told
to be
them
part
no?
of it. So we've had clients over the years that have requested to include some questionable, judgmental, I don't know, some deductions over the years that made me go, huh. For example, well, this is one of my favorites. Chris, what's the definition of a business deduction, a expense on ordinary and necessary?
Ordinary and necessary.
Ordinary and necessary. So that's the argument that has to be made for each one of these to pass the IRS.
What was the argument for the Playboy subscription?
So I didn't ask a $29.95 a whatever. That's between them and God at that point. I'm not gonna call and ask.
Is there a scenario where that could be a valid expense?
Yeah.
Sperm donation clinic?
Yes, absolutely.
I thought you say a professional photographer, but okay.
If somebody has a waiting room and they're willing to put a Playboy magazine out in their waiting room,
I want that to be my doctor.
I think that you could make the
make
the argument. It's ordinary for a doctor's office or some professional services to have reading material outside.
Okay.
Is it
What
necessary? Probably not, but it'd be ordinary.
Mm-hmm.
Now, the IRS would probably argue whether it's ordinary to have a Playboy in a doctor's office, but...
Yeah. And it's not his own personals. He let it sit there for a couple days and then he took it home. You know what I mean? That makes more sense.
Right. That he's using the old rule of if I drive to the post office before I go to the office, my commute from my house to my work is now business miles. Mm-hmm. Yeah.
That's clever.
Sneaky.
I like that.
Mm-hmm. But I have a lot of clients that we have legitimate conversations about sporting tickets, Chiefs tickets, Sporting KC tickets, Royals tickets. And whether or not they're entertainment type expenses, taking the whole team to Disney World.
Oh yeah.
But Cabo San Lucas, something exciting. Those are fun deductions at least.
These are all things I keep asking Michelle to allow us to do.
Yeah. So you should be able to answer this. Are those deductible, Chris?
In certain scenarios, there could be.
So the takeaway is in certain scenarios, anything is potentially deductible. Maybe?
That's a very broad statement. So you can't say no to such a broad statement in that situation because every variable could come into play that change.
Are you telling me my questions are no good?
No, I'm telling you that could potentially. I can't say no, but I can't say yes. That's what a lot of times people get mad at me is like, yes, but no. So I'm going to give you the yes, but no answer on that.
Well, and then I immediately went to all of the companies that are have dispensaries and grow. They don't have deductions.
Right. And Michelle's talking about the marijuana dispensary, the growing industry of the marijuana industry and how intertwined that is with federal controlled substance rules. And that if your dispensary is a certain type, if it's just a reseller, you can only deduct the cost associated with the actual growing or the acquisition of the marijuana, the cost of goods sold associated with it. If you've got a building, sorry, not deductible. But if you produce marijuana and you have kind of a vertical integration, there is indirect costs associated that are deductible as it relates to the selling of marijuana.
So that was the first thing that popped into my head. So no, not everything can be deductible.
There was one that was on our list that I hadn't seen.
Yeah.
That was maybe from you, somebody had said they're getting a tattoo of their business and can that be advertising? Mm-hmm. I like that creativity.
It was very creative. He went with it. He did. He has a big tattoo. Another guy told me that his Tweety Bird tattoo, he had that deducted. That he is not in the business of Tweety Birds or cartoons or anything like that. Just kind of gave him that edge.
Yeah.
That was going to make him help be successful in business.
I always like the car wraps because I wrapped my car with my logo. Then my entire car is now
Write it off.
It's a write-off. It's a write-off. It's a walking billboard. Every day I'm driving around. I'm working and I'm advertising
every minute of it.
Right. Well, the wrap I can get there.
Now,
I don't know.
There are some things that I was surprised to learn that are legitimate deductions that I did not think would be. But a swimming pool, you think, no way that could be legitimate. But you're saying it can be under certain instances, right?
Oh, yeah. If you can find a doctor that says that you need to have, medically, you need to have swimming exercise. Like that's the only way that you can physically exercise because of your brittle bones, let's say. So yeah, you could, if that doctor says it's prescribed and you have some medical condition, that's going to help with that medical condition to cure that. So yeah, you could in theory have a swimming pool as a medical expense.
I think I need to go doctor shopping. All right, what about this one? This one, it was crazy when I first read it, but then if you think about it, it makes sense because it is a profession. Strippers have had breast augmentation surgery. It's the polite way of saying it. That is considered that went to IRS court, didn't it? And I think the stripper's name was like Candy Hart or something like that, or something.
You know her name? Are you guys friends?
I researched this. I prepared for the podcast.
You didn't research Underwood.
I think that was a California tax court.
It's so
wasn't
weird.
It?
So weird. I think it's
sounds like something
incredible. It's like,
California would do.
I think her name, I mean, what she told me was Candy.
Well, no, I think I read online that she argued that she would get more tips with bigger assets.
Yes, it is deductible.
That was in one of the Playboy articles, right?
I did. Yeah, I read it at my doctor's office.
Yeah.
It's like we share a brain.
Yeah. I read it at the Playboy and waiting for my... Never mind, I'm going to stop.
And you're done.
Yeah, I'm done. All right, well, hey. Since you guys are the experts and we're talking about deductions and whether or not they would be allowed, I put together a little game. Would you guys like to play?
I'm always game.
Do I win? Is it a game called
Did you
I
say
Win?
I'm always game?
I'm
to
always
play
game.
a game?
Yes.
Okay. I'll leave that one alone.
Yeah.
It's fine.
Would you like to play, Michelle?
I do.
Okay, then let's play a game. All right, so when I'm asked you professionals, you experts, give you a scenario and you tell me whether or not it's a legitimate expense, a legitimate deduction, a legitimate write-off, or if it's BS. The first one would be, could a crazy cat lady who owns a junkyard write off the cost of cat food and the cost of maintenance for housing for the cats on her property? Owns a junkyard. Could there be an argument?
I'm going to let you argue this because I've actually read about this one before, so I know the answer.
And I think we all know that I do everything that I can in the best interest of my clients to argue that it's deductible, right? So I'm going to go with, she needs all those cats to keep the rats down in the junkyard. So they're kind of like having her own pest control service. So what's the difference between that and pest control service?
I'm
What
going
do
to
we
agree
think?
with you 100% on that.
Seriously?
Yeah.
You usually argue with me. You don't think so?
I don't know. I could, it is necessary.
Yeah.
The argument of ordinary using cats is probably a bit of a stretch, but I would agree with that.
It seems like all natural.
Yeah.
Survival of the fittest. And
Yeah. I'm in agreement that
You
this
think
is
so?
this could be considered ordinary and necessary and deductible.
Okay, I feel like if I'm right, then I feel like I won on double because Chris agrees with me.
Survey says number one answer. That's correct. It is. Actually, that was the exact argument. The case was Seawright versus Commissioner, obviously, and she said it was pest control. And
That's
she
awesome.
She got to do it. So.
Did she say she was saving the planet by not using chemicals like Michelle said?
I think she was just a crazy cat lady that wanted to like cats, but regardless, the IRS allowed it. Yeah.
Well, I took it one step further. I've been living in Lawrence for 18 years now, so I'm all environmental.
She probably wouldn't have had gone to the highest court if she would have used your argument that it was
Day one. Boom.
boom.
Boom. Saving the planet.
All right, this one comes from Annabelle in Lawrence. If a father decided to fund his teenage daughter's motocross career via his lucrative real estate business, okay, he's using his real estate business to fund his daughter's motocross career. 2 years later, his daughter goes pro. Was the approximately $150,000 the dad spent a write-off?
For his business?
Mm-hmm.
No.
Real estate company.
No. That is not ordinary and necessary business expenses for a real estate company. Now, if we want to deem this as an investment in a potential profit-motivated motocross career, which I don't know if there is there.
What?
I guess they do X Games.
Yeah, there's
X
stuff.
Games.
He was making some money over there.
If he's looking at this as an investment in his daughter, He probably has some basis in that investment of.
I was just thinking he probably wrapped the bike with the real estate investment company's logo.
$150,000
Marketing.
$150,000 marketing.
I mean,
Are you gonna say yes and no on this one too?
oh, I'm hard no. I'm hard no.
for his business. Hard
Maybe
yes,
if she set up a business.
if she set up a business.
Yeah. If
But
she's
not within his business as a whole.
Yeah.
Absolutely not.
This is a real case. The tax court said that most of the $150,000 was a deductible expense because the real estate firm, obtained new business connections, favorable construction deals, and other benefits from his sponsorship.
Wow.
So I could have
You're
gone
right.
with that.
You're right.
It's marketing.
That's
I hope none of our clients are listening. I just see that now I'm going to see a whole bunch of people.
We don't have a whole lot of motocross clients, though.
We'll talk offline.
Do we? Okay, I'm sorry.
we just might have picked up a whole lot that have motocross.
Yeah.
Marketing.
Or
Yeah.
I'm going to sponsor my son or daughter's future golf career.
Now we're talking.
Yeah.
All right, here's another. Back to the game. Could you write off your daughter's lavish birthday if your business manager was present? I mean, lavish, like band, ice sculptures.
Invited clients.
Are you, Michelle, are you asking me this question or whether
I
you
feel
can?
it. I'm kind
Were
of
these
known for
all-
doing this.
Are you trying to get clearance here?
If you were maybe writing off your own 39th
Asking-
birthday party for the 8th time,
Asking for a friend.
asking for a friend.
You only turned 39 8 times. I mean, it's got to be a big deal.
Yeah, well, we're working on the next. I don't know. I will remain silent as to whether I write mine off or not.
Well, let's just say, did this person get lucrative contracts from the sponsorship?
Yeah, seriously.
So the trick here is
There's no
Marketing.
probably business associated with this young lady's 16th birthday.
I didn't
So
think there was shit with the motocross either.
Right. I'm going to say no because there is no sponsorship, anything that could generate revenue in the future on her birthday.
I'm going to say the daughter wore a sash that gave mad props to her dad's business and its marketing, and they wrote it off.
okay. Yeah, it's no.
Oh, damn.
Dang it.
No, it's funny because
Gave me hope with
like
other
the
things.
explanations of these, did a lot of research on these, weekends, months, digging these up. But like that's the explanation for the real estate one. This one is just one word. No.
No.
All right, couple more. Could a pro bodybuilder write off body oil for his performances?
Hey, if boobs count, oil counts.
I think that should be a legal argument
Yeah.
right there.
Yes.
Citing that if boobs count, then oil counts.
That's what they did all the way up to the Supreme Tax Court. Boobs count, oil counts.
Right.
Yep.
What is it?
Yep. The tax court ruled that he could deduct the cost of oil as a business expense. This
Winning.
was Weir versus Commissioner.
Is anybody keeping track?
Does it say that they use the what was her name? Candy? Shady lady?
Oh, did they use it in the arguments? Yeah.
Okay.
Go big or go home?
Right.
Yeah. I'm sure they did. I mean, there's a natural correlation there. I mean, hey, if Chesty Love or whatever her name is gets to write off her assets, then I can write off my body oil.
Right.
Ordinary, necessary.
That's right. Couple more. I'm going to ask you, are these real or not real? So, did I make these up, or did this really happen?
Okay.
A struggling business owner sought the help of a professional arsonist to burn his furniture building down in hopes of collecting $500,000 in insurance money.
And he deducted it?
That's where we have to determine whether someone actually did that. I'm gonna say a hard yes. Someone tried to do that. I've known of
But then did they put it down as arson expense? Like what did they
contract labor,
marketing?
outside services.
Miscellaneous.
Yeah.
Okay.
Outside service.
Consulting fee.
Consulting fee.
Consulting fee.
Yeah, I agree with Chris. Yes, this happened.
It's almost one of those ones. It's just too bizarre. It's got to be real.
Yeah.
Absolutely. It did not work out for him,
Mm-hmm.
and supposedly he tacked on the $10,000 arsonist fee to boot, so he didn't get the write-off or the insurance or anything, and I'm sure he's probably went to jail.
Yeah.
Yeah, I think he could probably be charged with several things in that endeavor.
And all he did was try to save $3,000 on his $10,000.
People don't understand what a write-off is.
Just telling you.
They're all just writing it off.
Yeah.
It's a write-off.
And I think we'll end it there. That's it for today's episode of the Trust Us, We're Professionals podcast, brought to you by all of us at SSC CPAs and Advisors. If you ever have any financial questions, financial needs, you can always reach out through our website, www.ssccpas.com. Once again, that's www.ssccpas.com. Michelle, Chris, thank you very much for your time.
Thank you, Mr. Underwood.
Thank you. It was great.
You don't sound like you had a great time.
I had a great time.
You guys
Good.
can't see his face, but he's excited.
Okay. Good. I've never seen Chris excited, so maybe that's why I don't recognize
I'm
it.
measured.
You're measured with everything you do in life. I picture you buying ketchup in a very measured manner at the grocery store. All right, that's it. We've had enough. We're out here, guys. See you next time. This podcast was recorded and is being made available by SSC Solutions, Inc., together with its affiliates and its employees, SSC, solely for informational purposes. SSC is not providing or undertaking to provide any financial, economic, legal, accounting, tax, or any other advice in or by virtue of this podcast. The information, statements, comments, views, and opinions provided in this podcast are general in nature, and such information, statements, comments, views, and opinions in the receipt of this podcast by any listener are not intended to be and should not be construed as the provision of investment advice by SSC, to that listener or generally, and do not result in any listener being considered a client or customer of SSC. The information, statements, comments, views, and opinions expressed in this podcast do not constitute and should not be construed as an offer to buy or sell any securities or to make any investment course of action. The information, statements, comments, views, and opinions expressed or provided in this podcast, including by speakers who are not officers, employees, or agents of SSC, are not necessarily those of SSC and may not be current. SSC does not make any representation or warranty as to the accuracy or completeness of any of the information, statements, comments, views, or opinions contained in this podcast, and any liability thereof, including in respect of direct, indirect, or consequential loss or damage of any kind whatsoever, is expressly disclaimed. SSC does not undertake any obligation whatsoever to provide any form of update, amendment, change, or correction to any of this information, statements, comments, views, or opinions set forth in this podcast. No part of this podcast may, without SSC Solutions Inc.'s prior written consent, be reproduced, redistributed, published, copied, or duplicated in any form by any means.